Okay guys, welcome back to me again, and now I would like read the article, but before that don't forget to like, comment, share and subscribe. The title is Wall Street and August with a November on February. New York US stocks ended the month with their fourth straight daily decline on Wednesday, cementing the weakest August performance in 7 years as worries about aggressive interest rate hikes from the Federal Reserve persist, adding to pressure were declines in the technology sector and more specifically chipmakers, after soft forecasts from Seagate and SPINC. The three main index suffered their biggest monthly percentage declines in August since 2015, after hitting a 4-month high in mid until August. The S&P 500 has stumbled in recent weeks, dropping more than 8% throughout Wednesday's close and falling through several closely watched technical support levels. Selling pressure accelerated after Fed Chair Jerome Powell's hawkish remarks on Friday about keeping monetary policy tight for some time, thus hopes of more modest interest rate hikes. With the benchmark index down more than 5% after the past 4 trading sessions. All Powell cares about is getting inflation down and raising rates to do that. And in terms of how aggressive to be, that is also be determined from the data, said Tim Griscay, senior portfolio strategist at Ingalls and Snyder in New York. Right now, we are in this flip back and forth market. A lot of volatility, constrained rally we did have was just a bear market rally, probably some concerns we will go back down to new lows. Cleveland Federal Reserve Bank President Loretta Mester said on Wednesday the central bank will need to boost interest rates somewhat above 4% by early next year and hold them there in order to bring inflation back down to the Fed's goal, and that risk of recession over the next year or two have moved up. Owing to investor nervousness, stocks are also heading into a historically weak period for the market in September. September is easily the worst month of the year. It and February are the only ones to post average declines, but September is the only month of the year to fall more than it rise, so it could end up being sort of a self-fulfilling prophecy, said Sam Stovall, chief investment strategist at CFRI in New York. The data earlier in the day showed ADP private payrolls increased by 132,000 jobs in August, falling short of economists' forecast of job growth of 288,000 according to a reader's poll. However, the report was suspended for June and July as the methodology was overhauled following a poor track record of being in sync with the government's payrolls report. The jobs data from the Labor Department is due on Friday and expected to show non-farm payrolls rose by 300,000 last month after recording a 528,000 increase in July. Another strong report is likely to further cement expectations the Fed will continue with outside rate hikes after a 3-straight increase of 75 basis points. The Philadelphia SE Semiconductor Index lost 1.15% after Seagate, down 3.54%, slashed its first quarter earnings expectations, citing macroeconomic concerns that are forcing cloud companies and PC makers to cut inventory levels. In addition, SPINC fell 7.86% after a forecast downbeat quarterly and full year. Profit on slowing PC sales snapped. INC rose 8.69% after saying it will cut 20% of staff. Restructure its efforts-seeing sales unit and shut down some projects to focus on improving sales and number of Snapchat users. Okay guys, that's all from me. Thanks for watching me. Don't forget to like, comment, share and subscribe. See you next time.